Hey everybody, thank you for joining. Happy Saturday, and I appreciate all the likes in advance. It's like an advance deposit of a like. All the likes in advance. Much appreciated. So here we are. Let's jump in. A lot to talk about today, a lot to cover, but everything is related in this tapestry. So first of all, we begin with our disclaimer. This is edutainment. Second of all, the story today. Welcome to today's story. I hope I'm standing in the right place. I think everything's messed up. Yeah, maybe that's better. I don't know. But normally the Saturday morning segment is 10 stories. Today is 25, so we might need a new name for the segment. But there's simply too much to share, and it's all related. So let's go. Let's jump in. First of all, the market. And of course, my key isn't working. Ugh! Don't know why I even hold this thing. It doesn't work half the time. Anyway, the market, quick update here for everybody. You can see a lot of green stuff with the exception of stablecoins, and XRP are red, but XRP was on a bit of a rampage over the last week or so. So not surprising. Things take a breather. They run fast and take a breather. And we have dark green in Solana, Matic, Doge, and even Litecoin after me talking about that on Thursday, I think it was, about whales and what they're doing with their Litecoin bags. So that's the market. Next, we'll talk about Bitcoin bottoming news. And I know you're probably tired of hearing about Bitcoin bottoming news. It's been bottoming now for 12 weeks or more. But this is from the Rational Root. Big thank you to Jumba for sharing. You can see the short and long-term holder cost basis just crossed. Will Clemente has a similar chart as well. And this is typically a very good indication of a Bitcoin bottom. However, as we always say now, perhaps this time is different because I talk about the lid being on the market, and the lid is the Fed. And until they change course, we might be down here for a little more time. But just hopefully inflation will continue to crash down. We saw oil below $80, which is a big move, and rent increases are slowing down. So that's a big component of the CPI. That was the only thing that was actually going up. That's actually slowing down as well. So I think, we're way beyond peak inflation, but I think inflation is coming down hard like a rock. So fingers crossed for next month's CPI. Now, a little bit of Cardano news from Charles. Somebody called him, actually in this article, they called him Cheeky Charles, which I thought was funny. But he was talking about how the next mega bull market could be triggered. But he also spoke about how it could actually become a bit of a negative bear scenario. So in his bull scenario, he spoke about if America passes the Financial Innovation Act, we'll probably see a mega bull market because regulation is required to bring money into the market. And he also says if people like Gensler are empowered, we could see a mega bear market happen. And a ton of litigation occurs and poor entrepreneurs, etc., could be put out of business by a heavy-handed government. So Charles, you and I agree on that second piece. Speaking of SEC overreach is this story. And and a lot of people are probably like, Ooki DAO? Huh? What is that? But per Charles, this is very relevant. This is a story that just happened to be out the same day as his story as well. But the bear case could be represented by something like this. The CFTC yesterday charged Ooki DAO and its founders with illegally offering leveraged and margin retail commodity transactions and digital assets. And engaging in those activities means you have to be registered with the Futures Commission to be able to do that. And failing to adopt a customer identification program as part of the Bank Secrecy Act compliance program, you are in trouble. And it doesn't stop there. This is where it gets really interesting. Talk about overreach. They said members that participated in a governance vote would similarly be charged. Huh? Voting in a governance? Be charged for a crime? Anyway, simultaneously, the CFTC filed a federal civil law enforcement in California, charging Ooki DAO with violating the same laws as respondents. Now, the real kicker here, and the common grievance that many crypto folks have with this, is the financial regulations are unequipped for wholesale application to crypto products. As I say, there's no way they can go after 18,000, 19,000 cryptos. And regulation by enforcement is kind of the only tool they have left. Remember what happened to Tornado Cash last month as well? That is the critical thing. But the really scary thing for me and a big thank you as well to Sanjay for sharing this thought, is what crypto developer wants to build with the proverbial sword of Damocles hovering over their heads? Remember, as Sanjay says, the government hate for DAOs is like how tyranny hates democracy. So this is part of the overreach that Charles was hinting at. And this is scary. So I don't know where this is going to go, but it's definitely a lot of overreach. And the team yesterday and I were talking, Ben and Rob, about overreach. And this is definitely a concern. Back to Cardano, the Vasil hard fork was a success. It emerged as one of Cardano's necessary and important network updates that'll empower DeFi and DeFi dApps as they go forward. But it hasn't resulted in any jump in price. As opposed to Ethereum's tanking in price, at least it didn't fall. The Cardano price is flat. But what they did hit, though, is a new record of daily social mentions, over 2.3 million mentions in one day, which is staggering. So from a social perspective, everything's going really well with the token. So with that, let's switch gears. Let's talk about NFTs. I know people kind of love or hate NFTs, but according to Anatoly Yakovenko, the founder of Solana, he says NFTs could or will spawn the next Marvel or Disney, which is kind of interesting. And that would be kind of like a mega franchise of intellectual property. And he sees potential evolution like that of online bulletin boards in the 90s being kind of the analog to this whole NFT revolution. And if you think you're dreaming of the next Marvel or Disney in the next 20 years, he says it's probably happening right now out of NFT sets. So it's like, interesting. Let's jump into NFTs and see exactly what's going on. First of all, you can see the ETH NFT volume is down hard across all their favorite sites: OpenSea, Axie, Lava Labs, SudoSwap, Foundation, Looks Rare, X2Y2 or whatever. I don't even know that one. But you can see clear downtrend as they go forward. But on the other hand, you've got the Solana network. The NFT volume is up. And this is per Nansen. And the week ending September 12th, just a week ago, they had a new record of 1.5 million SOL, or $50 million in Nansen. That's the number of Solana users interacting with NFTs, the highest since late June. So that's kind of, you probably can imagine what's happening here. I don't know for a fact, but I sense the Ethereum NFT players are migrating over to another blockchain to do their business. And that's also a little bit reflected in price. Here's a little chart from Terminal of Sol versus ETH. Sol is up 3.5% for the week, and Ethereum's down 20.5%. Of course, a lot of that down has nothing to do with NFTs. It's probably to do with miners selling their Ethereum as they go forward. Let's talk about more stuff that's happening in the metaverse. So trading volumes for virtual land has ground to a halt, collapsed over 98% from their highs. And this is from Delphi Digital. And you can see here from Dune Analytics, the prices for the cheapest lots, what they call the floor, have dropped by over 75 to 80%. And ownership distribution of parcels is also centralizing, which means the kind of parcel whales are snapping up all the cheap real estate to be able to sell it again when the market gets hot again. So be careful buying the metaverse. And that is a little bit of virtual land. Again, in full disclosure, I never really believed much in the virtual land stuff or the metaverse per se. In other news, this was a video I put out during the week on that infamous day last week. And I was ridiculed a bit about talking about Elon's plans for bots. It's like, no, they're not going to have bots until after 2030, etc. But here's a job posting that was posted a few hours ago. And I'll add the video as well here after I finish this, the AI bot video and what it means for the stock price in the future. I believe theoretical model, of course, but Reuters reported the company is ramping up ambitious plans to develop the Tesla bot known as Optimus. For those who missed that video, and internal meetings and hiring, Tesla is hiring over 20 positions, including software and firmware engineers, deep learning scientists, actuator technicians, and a whole bunch of internships. And Tesla's clearly on the path to build a humanoid bipedal robot at scale to automate repetitive and boring manufacturing tasks. And this one job posting was very interesting because most importantly, in the description of the job posting here, you will see your work repeatedly shipped to and utilized by thousands of humanoid robots within our factories. By the way, if you know what PyTorch is, let me know in the comment below. I guess it's a version of Python language. But that is very clear. Why would they be hiring 20, 25 people to manage thousands of humanoid robots within our factories? Their exact wording. This is real. This is not fake. So with that, let's move on to the next story. Recession. Recession fears smashed the Dow Jones Index. It is a new 2022 low. Remember, NASDAQ, S&P 500, and Dow all kind of perform differently. The Dow has 30 companies. Some are kind of old-fashioned, but they were kind of pummeled this week. The Dow fell 1.6%. Lowest level, as I mentioned, for 2020. S&P fell 1.7% to close above its mid-June low. So that hasn't fallen to a new low yet. And the NASDAQ slid about 1.8% on Friday. And it was a rough week on Wall Street. No doubt about that. Fifth weekly loss in 6 weeks. And energy prices also fell sharply lower. And mortgage rates shot up as well to multi-year highs, which is a big problem for the housing industry. Now let's talk about traders as well, what they did in reaction to this. The urge to hedge exploded. There was a record volume of put buying. 33 million put contracts in the S&P 500 were purchased on Friday, which is massive. And money managers have slashed equity exposure to record lows amid recession fears, while their cash holdings hit all-time highs, according to Bank of America's latest survey. And again, we'll see what happens. But one of the things that I've seen in my past is anytime this type of, you could almost call it an option capitulation event happens, typically the people that buy those puts don't make any money on those puts. It's kind of like insurance, which means we could be close to a bottom. 3,600, we're pretty much there in the S&P 500. Could it go to 35? Yes. 33 possible. But, we're kind of, I don't want to say, depending on what the Fed do, if they really, really screw the pooch, we could be in trouble. But again, we'll see where this goes. In addition, speaking of the Fed, this Fed balance sheet reduction has been minuscule so far. And they also are not touching the green part, which is the MBS, which is mortgage-backed securities. And as you know, the Fed had very aggressive plans to roll off a lot of their portfolio. But we're not seeing any drastic moves yet. It's been nearly 5 months since the Fed announced plans to reduce the portfolio. Yet the actual reduction has been minuscule. And even in Powell's press conference on Wednesday, when asked about it, he said, it's something I think we will turn to, but the time for turning has not come. It's not close. That was key that I covered as well. And again, who's going to buy this stuff? I don't know, but also with the mess that the housing market is in, dumping that $2 trillion of mortgage-backed securities into the private sector would also crash the markets further. So at least they're a little bit prudent in this regard. They're not completely screwing the pooch yet, hopefully. Now, back to interest rates. This is a big thank you to Sanjay for sharing this one. This is the clear 10-year downward trend. Is it at an end? As you can see, the downward trend hit those little highs and then broke back down again for the first time in a decade. In fact, even longer, you could argue, since 88. That is 33, 34 years. We broke above this downward trend. And remember, what's different this time is debt. Debt loads are unprecedented. And you cannot jack rates to this extent with this level of debt. Something will break. Also, the pace of increase of rates is also not sustainable. And let me be clear, there will be no soft landing, as I always said, just to repeat again, to make sure people don't understand. I never said Fed funds rate couldn't go above 3.5. I said if they do, they'll create financial Armageddon. So we are now 25 basis points away from them really breaking stuff. And they're going to break stuff. No doubt about that. So I just wonder what those who are expecting to get elected are going to say with the elections coming up on November 8th, 2022. So next, let's talk a little bit about inflation. This is stuff they're trying to control, but I thought this would be interesting perspective. And kudos to Mark Yusko. He was on a show called On the Margin. And this is a show I watch every Saturday morning. I love listening to these guys. And there's not many shows I listen to, but I did grab some numbers to finish his thoughts. And I thought this was fascinating. Just to put, again, more inflation in perspective. This is 50-year inflation. This is 1971 numbers, the cost of stuff, compared to 2022 today. So you can see the average income per year in 1971 was $10,600. Today it's $54,000. So salaries in 52 years have gone up 509%. 5x, not bad. But the cost of a house has gone from $25,000 to $420,000. That is 1,663%, very high. Monthly rent has gone from $150 to $1,900, nearly 1,300%. Fuel gone from 40 cents to nearly $5, depending on where you are. If you're in California, it's over $6 in some places. That is over 1,100%. A car, which was the equivalent of kind of a good car, a Datsun 1200 Sports Coupe. The analog would be a Toyota Camry today. It's gone from 1866 to 29,000, 1,600% increase. And two things that are kind of sticky, which are the same, like postage stamps. It's kind of in line with salaries, only up 750% from 8 cents to 60 cents. And a movie ticket from $1.50 to $11, 700%. So the key thing to take away here is over the last 50 years, your salary has gone up 5 times, but your cost of living has gone up 12 times. Therefore, people are sadly getting poorer based on this illustration, based on this data. Next in the box, this is related as well. The biggest obstacle to taking risk, obviously, this is the U.S. consumer. And I took this chart. It's from Hartnett from Bank of America. And you can see back in 2008, you had a huge dip in consumer confidence. And at the same time, a huge spike in consumer credit card debt. Guess what we're seeing right now again? The same thing. I added those 2 red arrows to point out exactly where we are. The middle arrow is a little off, but you get the message. And here, it's worse. The consumer confidence is lower. That's the teal line. And the consumer debt is the same and increasing like a rocket ship. So remember, as rates increase, this will drive a ton of delinquencies. No ifs, ands, or buts about that. Now, people ask, what, it's a crypto channel, but why do we talk about foreign exchange and central banks and debt and confidence and everything else? Well, this tweet summarized it very nicely from Charles Edwards. The euro is at a 20-year low. The yen is at a 24-year low. The British pound is at a 37-year low. We are seeing the collapse of fiat Ponzi currencies into hard currencies. And this has been said before, but it's just very eloquently put here. First of all, fiat's collapse into the dollar. The dollar is going to the moon right now. Everything else is collapsing into it. And then the US dollar will collapse into Bitcoin, according to Charles Edwards. This is why we talk about everything. This is how everything is connected and interrelated, and how there are catastrophes happening around the world. In fact, let's talk about one of those right now. This is a case in point, and this is truly tragic. A lady in Lebanon, excuse me, she held a bank hostage with a toy gun, not a real gun, toy gun, to access her family savings to pay for her sister's cancer treatment. I was having some tea. And banks have frozen people's accounts now for 3 years in Lebanon due to the economic, or so-called economic crisis, which is manufactured by the management of the actual country itself, which is a travesty. She said she was going to sell her kidney to raise money, but she has nothing more to lose. Now, the thing is, banks shutting down for 3 years, taking your money, closed indefinitely, or forcing people to do desperate things. And this is tragic. So anyway, Lebanon is happening now. What country is going to happen next? I don't know. But Bitcoin fixes this travesty. And now you begin to see how important this is. Next in the box, we're going to talk about the UK investors spent £30 billion on crypto. That is a pretty substantial amount. And this is findings from a recent study. And about 34% of the British population own different forms of cryptocurrency. Now, it would be interesting to see what they own. And I have that, what they've been buying too, which is super interesting. So the team in the United Kingdom, they are, first of all, about 20% of their money goes into Bitcoin, and then about 8% into Ethereum, 6% into Dogecoin. They're buying Litecoin. Don't buy Litecoin, everybody. And a little bit of Chainlink. Chainlink was typically a good historic safe bet, but it hasn't done much in the last year and a half, 2 years. And it's still hovering around that $7 level. So I'm sure they're buying other stuff too. Good to see the majority is Bitcoin, and the British people are well aware of the problems that are going on. Speaking of the problems in the United Kingdom, Forbes wrote a scathing article, and I could not believe their words. They said the UK government needs a lobotomy from the steps that they have taken over the last couple of days, and it was panned right out of the gate by a number of Westminster MPs. Truss's budget fared even worse with investors who voted with their feet in droves against it. We saw crazy things happening in the space of one day in the markets in the United Kingdom as the UK unveiled tax cuts, the biggest in 50 years, and it'll drag the economy out of a recession and drive some trickle-down economics. But ladies and gentlemen, trickle-down economics does not work. Tax cuts only line the pockets of the rich. They don't give it to the people who need it the most. And it's really terrible. And also, to pay for the cuts, her government will issue another 50 billion in fresh debt on top of the 100 billion in the UBI for the utility bills, which will be spent over the next 2 or 3 years. So again, crazy stuff. Adding debt, crazy inflationary environment, cutting taxes, hoping that'll solve the problem. History says it doesn't. Financial Times piled in as well, and they are peeved as well. Little piece here. I won't read the first part, but, well, there's a couple of things that are key to point out. One is a huge increase in fiscal deficit will drive more inflation down the line. 8.3% is the current deficit in terms of GDP. It's going to go a lot higher. Debt to GDP currently is about 100. It's going to go to 120, 130 in my mind very quickly. I did a video on that a few weeks ago. And who could seriously regard this huge fiscal loosening as responsible? In sum, the mini budget will do nigh on nothing to raise medium-term growth, but risks serious macroeconomic instability. So again, crazy things are happening by governments. We saw situations in Lebanon. We see the US Fed taking drastic steps to smash the economy. And then at least Truss is trying to bring the economy back. But unfortunately, those steps won't work. And lots of other proverbial stuff is going to hit the fan. So buckle in, everybody. It's going to be a bumpy ride. Thank you all for being here on a Saturday. Hit the likes and subscribe if you haven't. I appreciate you all. Tomorrow is our weekly Q&A live. We answer all your top questions from the week, and we have some super interesting ones as well. Thank you all. Happy Saturday. Thank you to the mods in the chat. T&D Tesla and Beardy and all the team out there. Thank you all for being here. See you later.